If you still think that having money in a foreign bank means no one will ever know, you're living in the past. Today, in most of the world, your foreign bank account is probably being reported automatically to your home country's tax authority. No phone call, no letter, no warning. This global system is called CRS, the Common Reporting Standard. And if you don't understand how it works or which countries are inside or outside this system, you can make very expensive mistakes with your banking and your tax planning. In this video, I'm going to explain what CRS is, how it actually works in practice, and which types of countries people look at when they want more privacy and control while still staying legal and compliant. I'm also going to show you where GloboBanks can give you a real advantage because navigating CRS alone with Google and random YouTube videos is one of the fastest ways to get in trouble. I'm Matteo Maglia, Partnership Manager in GloboBanks, the banking introduction company for international accounts. Every week, our team helps entrepreneurs and investors open and protect bank accounts around the world, taking into account CRS, FATCA, local regulations and each client's tax residency. Let's start from the basic. CRS stands for Common Reporting Standard. It was created by the OECD in 2014, and today more than 120 jurisdictions participate, including almost all major financial centers in Europe, Asia and Americas. The idea is simple. Financial institutions in participating countries must identify where you are tax resident, collect information about your accounts, and send that information to the local tax authority where you live. Then, once a year, tax authorities automatically exchange that data with each other. So, if you are a tax resident in country A and you have an account in country B, and both countries participate in CRS, the bank in country B reports your account to country's B tax authority and they send that information to country A. No special court order, no investigation, it's automatic. Why gets reported? Typically your name, address, date of birth, your taxpayer identification number, the bank name, account number, year-end balance, and in many cases interest, dividends and certain types of income. CRS was designed to fight tax evasion, but it also completely changed how international banking feels for legitimate people who simply want diversification, security and privacy. Now, one very important point. CRS is not same as FATCA. FATCA is a US system focused on US citizens and US tax residents, and it obligates banks around the world to report information to United States. CRS is broader. It is multilateral. Countries report to each other, not to just one country. And interestingly, the United States itself is not a CRS country. It has FATCA, but it never signed onto CRS. This is one of the reasons why some people consider the US mostly non-CRS option for certain types of clients, like for example for foreigners that are searching for a non-CRS country. But again, that doesn't mean it's a place to hide money. It means the reporting framework is different and must be understood very carefully. So, what does all this mean for you as an international entrepreneur or investor? First, if you have foreign accounts in CRS country and you are tax resident in another CRS country, you must assume those accounts are being reported. Second, you can't build a serious banking strategy in 2025 pretending CRS doesn't exist. And third, there is a huge difference between illegal tax evasion and legal tax optimization and privacy. If your objective is to hide assets from your tax authority, you're in the wrong game, and GloboBanks is not for you. If your objective is to legally relocate your tax residency, structure your assets correctly, choose jurisdictions that respect privacy and due process, and avoid unnecessary over-reporting or mistakes, then CRS becomes something you have to manage, not something you can ignore. That's where we come in. Now, let's address the question in the title. Which countries are better to avoid CRS? The first thing you need to know is CRS is now the global default. Most serious financial centers are in, but there are still three big categories that people look at when they want more privacy and control. Number one, countries that do not participate in CRS at all. Number two, countries that formally participate in CRS but where implementation is low, partial or focused on certain account types. And number three, countries that are in CRS but become interesting when combined with a legal change of tax residency, so that when gets reported is no longer relevant to your whole DIG tax country. Let's go one by one. First, the non-CRS country. There are still dozens of countries that have not joined CRS, including certain countries in the Middle East, part of Africa, Asia and Latin America. On paper, those countries do not automatically exchange banking data under the CRS framework. However, this doesn't automatically make them perfect banking havens. Some of them have unstable banking systems, weak regulation, currency risk, or are not on EU or OECD blacklist for tax cooperation. Others may have strong local banks, but very limited options for non-residents. And many of them still exchange information in other way or might adopt CRS in the near future. So just saying I want a non-CRS country full stop is usually a bad strategy. What we do at GloboBanks is analyze which non-CRS jurisdiction makes sense for your profile, if any, and whether they can be combined with other accounts to create a structure that is both resilient and compliant. Second category, countries that are formally CRS but where the practical implementation is uneven. In some places, certain local banks or account types are not yet fully integrated into the automatic reporting system, or reporting is focused on like just for local residents first. This does not mean they are secret, but it does mean that you need to understand what is reported, which thresholds apply, and how the bank identifies your tax residency and how your structure looks from the regulator's perspective. Again, this is not something you figure out by reading a blog post. At GloboBanks, we talk to banks, compliance teams, and local professionals, so we know how these rules are actually applied on the ground, not just how they are written on a OECD PDF, for example. Third category, and for serious clients, this is often the most powerful. You choose countries that are in CRS, but you change the story that gets reported by legally changing your tax residency and structuring your assets accordingly. If you move your tax residencies from a high tax country to a territorial or low tax jurisdiction and you genuinely meet the condition to be tax residents there, then a foreign account being reported under the CRS is no longer a problem because it is being reported to the right country. In other words, instead of trying to hide from CRS, that, like I told you, there are few options and we can let you know which are if you like to book a call, but you know, it's a good strategy to find the right banks all over the world. This is where GloboBanks work best. We're not a law firm and we're not your tax advisor, but we work alongside those professionals too. Make sure your banking choices match your tax residencies, avoid conflicting signals, and reduce the risk that a bank or authority sees your profiles as inconsistent or suspicious. Now, how does GloboBank actually help you in practice with CRS? First, we map your situation. Where are you a tax resident today? What passport you hold? Where your companies are based? What type of income you generate? Where your money is going to move? Second, we segment your needs. Do you need a personal account, individual account only, or also corporate and possibly private banking? Do you operate in crypto, high-risk industries, or completely traditional sectors? Do you prioritize reputational safety, yield, or maximum privacy within the law? We select jurisdictions and banks. CRS vs no CRS. Onshore vs offshore. Retail vs premium vs private banking. We know which banks are currently open to non-residents, capable of handling international entrepreneurs, and realistic for your profile and deposit size. First step, we prepare your story and documents so that when the bank looks at your file, they see a clear tax residency, a coherent explanation of your activities, and a structure that matches what they are allowed to accept. That drastically reduces the risk of being flagged internally as potential tax evasion, which is the number one fear for banks under the CRS. Finally, we introduce you directly. You are not just a random online application, you are a GloboBanks client presented through channels that are already trusted by the banks. This doesn't mean automatic approval, nothing does, but it means your case is taken seriously, looked at by the right team and considered in the right context. Try doing all of that alone with Google. To wrap up, here are the key ideas I want you to keep from this video. CRS is real, it is global, and it is not going away. If you try to avoid CRS by hiding money, you are taking huge legal and personal risks. If you understand CRS, choose your jurisdictions intelligently, legally define your tax residencies, and build your banking structure with professionals who live in this world every day, CRS becomes something you manage, not something you fear. At GloboBanks, we help you open the right accounts in the right country with the right banks designed around CRS, not in denial of it. If you want to know what your options are, whether you should look at non-CRS countries, more flexible hubs, or a complete restructuring of your banking, you'll find a link below. Share a few details about your profile and our team will review your situation and tell you which directions make sense for you right now. Build a banking structure that still works even in a world of automatic information exchange. I see you in the next video.